Hi, everyone, and thanks for joining us for today's webinar, How to Evolve Your Financial Reports to Get Back in the Driver's Seat. My name is Ben Collins, and I lead the Financial Services vertical at Sage Intacct, and I'll be leading the session today. By way of very brief background, before joining Sage Intacct, I was with SS&C Intralinks for over 10 years, and prior to that was actually an investment banker focused on the tech sector. I'm also pleased to be joined by my colleague, Kelly Gagne, who is going to talk about and also show us how many wealth and asset management firms struggle with their current approach to reporting, and how many firms that refine their methodology are in a much better position to make data-driven decisions quickly. Before we dive into things, I'd like to go over just a few quick housekeeping items. If you experience any technical difficulties during today's broadcast, please log out of the On24 platform, close any other applications or browser windows, and then log back into On24. If after taking these steps you still have difficulties, please contact On24 technical support. We want to make this session as useful and helpful to you as possible, and we're also going to try and keep things to around 30 minutes, as we know you're really busy. But if you have any questions during the webinar, please feel free to submit them in the Q&A panel. We will try to address those at the end of the webinar. If we end up running out of time before we get to your questions, we will follow up with you afterwards to get your questions answered. And lastly, we'll also be sending you a copy of this presentation and a recording of this webinar in a follow-up email after the event. All right, let's dive into things. So let's set the table a bit and look at some of the macro trends that are impacting the wealth and asset management industry. Firstly, with things slowly starting to return to normal, many financial services firms are struggling to define what their new operating model looks like. Part of that rationalization relates to digital investments that have been made over the past 12 months, or perhaps evaluating new investments that have been delayed. There's been a lot of talk about digital transformation in the wealth and asset management space in recent years, and firms are trying to assess which investments have paid off, which may need some work to generate a return from. Maybe the implementation was rushed, or people just haven't been committed to the change, and which ones are effectively and unfortunately a sunk cost. One of the things that's remained unchanged, though, and maybe it's even escalated a little bit, is the need for solutions that enable data-driven decision-making. Moving on to the second bullet here, clients in the wealth and asset management space have an evolving set of expectations, and let's just say it isn't getting any easier to meet their needs. More and more customers are looking for these hyper-personalized outcome-based plans combined with a holistic approach, which involves planning across multiple different dimensions. For instance, looking at a client's investments, tax situation, estate planning, just to name a few. And these new dimensions are yet another set of data points for investment firms to monitor, report on, and communicate back to their clients. On the communication side, as client demographics shift to Gen X and millennials, the need for firms to have an easy, seamless way to facilitate this type of virtual engagement that these folks are looking for is now table stakes. From apps to support through chat services, as well as integration with different instant payment services, those are all critical to serving these Gen X and millennials. Another relatively recent development has been the need for firms to step up their game when it comes to ESG reporting and defining metrics that really resonate. So clients want transparency and validation that their firm's investment strategy aligns with their socially responsible goals. Lastly, the popularity of passive strategies simply hasn't abated, meaning asset managers will need to brace for more pressure on their operating margins this year. Operational excellence is now critical for defending margins in a period of greater fee transparency as well as lower fees. So as data increasingly becomes the raw material for success, which as an aside, I think was from a Goldman Sachs publication, so I don't want to take credit for that one, wealth and asset management firms need to behave and function almost like tech firms when it comes to how they manage and make decisions based on the insights and information this data provides. All of the new technologies that I just touched on allows for the accumulation of lots of data from various channels, web, email, apps, etc. But how does this data allow finance leaders within financial services firms to spend more time being strategic and forward-thinking? You can see here that in a survey done by the Argyle Executive Forum, 77% of senior finance leaders recognize that the need for a data-driven finance function is essential to achieving strategic goals. However, and this is a big however, 64% also admit that their finance function is not proactive enough in using data and analytics to identify, prioritize, and address critical issues. So, how do we fix that? It really comes down to finance leaders seeing data as a means to influence and drive real strategic decisions. And the ones who are seeking out new technologies to help them synthesize this data in real time are effectively shifting the role, the traditional roles, that is, of the finance function, moving from the historical-looking accountant to a forward-looking business analyst. So as financial services companies gain value from data-driven analytics, they also need to embrace self-service capabilities that puts data in the hands of the finance team, who should then in turn be empowered to drill into the data to figure out what's working and also what's not. So these new insights can be pretty meaningful and can help create broader organizational enthusiasm for using data. And you can see here in the charts to the right some of the data points that illustrate how finance leaders are turning to technology when it comes to gaining a better handle on their firm's reporting processes. You can see that automated period reporting was viewed as one that would have a pretty sizable impact if done properly. In fact, the first item around having better forecasting, as well as the fourth around more accurate decision-making, all tie back to having accurate current reports. As someone who is schooled in all of the Excel shortcuts at the start of my finance career, I shouldn't probably be surprised to see that there are now all sorts of stock images available on the web, like this one to the right. And believe me, I love Excel. I have a lot of friends in finance, and we have fun sharing notes on all the interesting things we've used Excel for in our daily lives. And yes, we're nerds like that. But downloading data from your general ledger and then having to manipulate that data in Excel is not ideal. Firstly, there can be data fidelity and integrity issues. So anytime you move data from one system to another poses a security risk, as well as a risk that maybe not everything gets transferred accurately. Also, the minute after you complete this download, that data is now stale. Now, I was attending an event this week and I heard a quote from a CFO who was bemoaning, and this is a quote, "There's just too much going on. I just want things to slow down." Which on the one hand, I thought was fantastic because his honesty was refreshing and he was articulating something that probably every single one of us has thought about or felt once in a while. But on the other hand, it's really just not possible. Things aren't slowing down. And that's where we need to lean on technology solutions to help us from feeling overwhelmed. One of the other things that I hear on a regular basis is that there isn't consensus around what metrics a firm should be tracking. But that's not necessarily a deal breaker if you have a flexible reporting engine that's capable of creating different dashboards based on the role or department within your firm. You can see this quote at the bottom from Edward Tufte: "If the statistics are boring, you've got the wrong numbers." So as you're creating a new reporting methodology for your firm, take an inward look and see if the KPIs you're using are the right ones and that they're actually providing the insights you're looking for. And for those that aren't familiar with Tufte, he's a brilliant statistician, professor at Yale, also published a pamphlet a few years ago criticizing PowerPoint as a communication format, saying that we treat slides as a medium for self-expression more than a medium to connect with our audience, and that condensing our ideas into bullet points can break up the flow of the narrative. And I guess by that tangent that I just went on, I completely validated that hypothesis. Also, I didn't really intend this slide to be a critique of the Microsoft Office package, but the moral of the story is that Excel is a very powerful tool, but it does have its limits. And recognizing when you're pushing those functional boundaries is important. One of the questions that we field on a regular basis from financial services firms is, what metrics should I be tracking? And what are other firms in my industry doing that I should maybe adopt? So there are a couple things I'll highlight before Kelly actually walks us through a quick demonstration of how this actually works. Firstly, most software companies offer out-of-the-box reports. including us. But sometimes those might not capture all of the dimensions that matter to your firm. Before purchasing any software that streamlines and automates reports, understand what you're trying to fix and have a very clear picture of what that after scenario looks like in your mind. Another thing I'd highlight is that automation can be a massive time saver, especially when looking at consolidating data from multiple entities. This is where a lot of wealth and asset management firms are seeing almost immediate efficiency gains. This is like the autopilot feature in a plane, and I'm still a little hesitant about the ones in cars, but you don't even need to be in the driver's seat for these reports to provide great intel for your firm. Now, I already talked about the pitfalls of leaning too hard in Excel for your reporting on that previous slide, but in general, it's definitely best practice to avoid this if at all possible. And lastly, what KPIs and reports should you set up to drive real-time analysis and decisions? Now, I've listed out a few here, but the beauty of advanced reporting tools is that you have a ton of flexibility into what you're able to track. The one thing I'd recommend is to take a crawl, walk, run approach when you're implementing new systems to drive your reporting. You don't need to start inventing new metrics to monitor out of the gate. However, if it is something that you want to measure, the sooner you can start establishing a benchmark, the sooner you have a basis for comparison. All right, now that we've established a little bit of context around how advanced reporting tools can elevate your firm, I'd now like to turn things over to my colleague, Kelly Gagne, who is going to walk us through how she's seen wealth and asset management firms embrace technology to transform how they analyze data. Kelly, over to you.
Thanks, Ben, for that intro. As you have all been listening along with Ben's discussion, primarily around the pains in Excel, I'm sure many of you were recalling times that you had spent countless hours in Excel trying to manually manipulate data to create reports that gave you the appropriate insights into your business needs. With Sage Intacct's custom reporting and dashboarding, you will no longer need to rely on Excel to report on your business metrics. Reporting that is catered to your specific company's needs will be maintained in real time right in your accounting system. So being able to interface with this data on a dashboard like this CFO dashboard that we are currently looking at right now. I've taken this dashboard and I've included metrics that are important to my CFO. So things like cash, AUM, stocks, hedge funds, and current ratio on the first line of KPIs, taking a more of an asset and liability view at our company. And then in the second line, looking at more of a strategic view in the sense of company performance, like net income, revenue, our number of advisors, and then merging that information together to give us a KPI like average revenue per advisor. The entire system, from the KPIs that we're seeing here, to the reports, to our graphs, are customizable to look at information that is important to you. Right now, we are just looking at an example of a CFO dashboard that many of our wealth and asset management customers would use to reflect the information that they need. We can see through this dashboard that we are looking at metrics in different ways, from reports like our profit and loss by entity, fully consolidating all of our entities at once and looking across our P&L accounts, to graphs like this investment allocation graph, where we're able to look across where our investments are standing and which balance has more. We can then drill down into these reports and graphs to get down to the details of how this is coming through. So having that ability to find where this information came from. The way that Sage Intacct can create reports and graphs and KPIs, such as this top advisor's revenue report, where we're looking at our service charges across a breakout of all of our top advisors, is with our dimensionality. So as we drill down into that graph, we can drill down into this report here to see how the details are flowing into the report. So the way that Sage Intacct knew that Nick Tesla influenced this revenue was based on the information that we input at the invoice, having the ability to tag out information across our appropriate dimensions that are, again, catered to your business. So if you would rather track something like cost code rather than department, you can track that customized to your business. You have the ability to have as many custom reports, KPIs, and graphs in the system as you need in order to report on the business in different ways. For example, here we have reports and graphs that are looking more into an overview of the AUM and also an overview and a quick look into company performance in the sense of profit and loss and revenue generated. What if we wanted to take more of a deep dive into assets under management, so more of a chief investment officer role? We can have as many dashboards in the system to organize our data, our reporting, our graphs, our KPIs, in order to look at the system in a different way. So here I'm looking at another dashboard that has information that is specifically pertaining to investments. I have a few overlapping KPIs here where we're looking at stocks, hedge funds, bonds, PE, other investments, and AUM, but now I have a different mix of graphs and reports that strictly focus on investments. For example, here at my investment portfolio detailed, I'm looking at my different investments grouped from stocks and bonds, private equity, to hedge funds and other investments, all broken out across our cost basis, our fair value adjustments, as well as the fair market value. We can see a further more detailed view of our investments, like our investment performance month over month based on our fair market value. And then lastly, we are also looking at a fund comparison. So maybe our company has multiple funds and we would like to see how the funds are performing comparatively, where we're looking across our only private equity investments and then looking at the percentage change here and overall performance here summed. These are just a few ways that we will be able to take you out of Excel and put all of your evaluation into your accounting software, Sage Intacct. Let's shift our focus now to ad hoc report creation, something that many of our wealth asset management customers struggled with prior to coming over to Sage Intacct. Sage Intacct gives you out-of-the-box reporting functionality. So think of these as your basic reports. We give you over 100 reports, stock, balance sheet, cash flow statements, P&Ls, things of that nature. Here in my report center, I have a mix of both the reports that were given to me upon implementation of Sage Intacct, as well as reports that I've created customly in order to view my business in different ways. Again, you can have as many reports as you'd like. It is unlimited, and you have all of the insight in the world that you need for your business. Now, how are we creating these reports? We have the option to first edit the reports that we were given in that implementation, but we also have the option to create a report from scratch, create a graph from scratch. Any report we can create as needed. Let's take a look at a report and see how we can build a report. So what we'll do is we will create a new report from scratch. Let's take a report where we're going to analyze revenue by customer as well as by service or item that we provided to that customer. This will be a dimensional report, and now I will bring that in. So here I am going to bring in my customers. So my rows are going to be my customers or investors, and we'll just say all customers here and include in the report. We'll go further into the columns. So what am I reporting on here? I'm going to report on just revenue in this instance, but we could have as many columns to report on different types of account groups or accounts. We can also have as many columns as needed to report on different time periods. So right now I'm going to report on the current year, and maybe I want to look back a couple of periods. I can offset this by multiple periods and update the date effectively, or keep it at the current period, and all of my information from the system will populate into this report in real time as I'm entering invoices, as I'm entering in whatever is affecting this information. Here I'm going to expand this by services. So what did we provide to the client to attribute that revenue? We can also easily add on a color scale in order to see quickly the performance and outliers in my numbers. So I've created a few information points here. Let's see what the report looks like so far. I've already created a full report here. I'm looking at my customers, my different types of services for revenue, and then a fully consolidated report here. And all of this, again, is researchable. I can drill down into these numbers to see how it's influencing, see my AR invoices that were entered that have affected that report. All in real time. We can take these reports and export them to PDF, Excel, CSV. We can even email them out from the system automatically to send out reports maybe to board members or investors that are customer-facing reports. So that is quickly how we can easily create a report in Sage Intacct. Now there's so many other attributes that we can do with the system in the sense of creating a report, but for time purposes, we will leave this report as is and save and done. I have just shown you just a few ways that Sage Intacct will be able to help enable your wealth and asset management company to take an accounting environment and customize it to your business's needs and have all of that insight and information waiting for you to be able to investigate and appropriately know how your business is performing. If you have any questions, please reach out to Ben or I. We are more than happy to give you more information on the reporting as well as a further customized demo to your company in Sage Intacct. Ben, back over to you.
Thanks very much for that, Kelly. As someone who's a visual learner myself, it's always nice to see how this reporting functionality actually looks in action. Now I'd just like to take a minute to highlight a case study of a client that was struggling with creating a solid foundation for their financial reporting. Most of you know Brookfield, a global leader in alternative asset management. They're in 30 countries, have over 1,000 investment professionals, pretty massive firm, but they were having a very difficult time synthesizing all of their data and making it consumable. Now, because Sage Intacct's general ledger uses dimensions that capture the business context of each transaction, Brookfield's public securities group can now analyze performance by various drivers without having to manipulate data outside the system in Excel. So in addition to preparing standard balance sheets and income statements, this reporting functionality actually allows the team to build reports that summarize the organization's investments by type, cost center expenses, platform costs by department, profitability by fund, for example. You can see the quote here from the VP of Finance around the flexible reporting, allowing them to slice and dice the data however they need to for real-time planning, which is a pretty significant improvement over their previous software, which was basically just a general ledger dump into Excel. Now, the reporting tools also help with their annual budgeting process, so they can perform detailed comparisons for specific departments, something they weren't able to do in the past, and they can actually get their budget finalized on time instead of halfway through the following year. They're also able to easily produce custom reports for different stakeholders. Remember what I said earlier about how different teams need different KPIs? So these include consolidated reports for the parent company, budget reports for individual departments, internal management reports for the executive teams, as well as summary or detailed financial reports for the different operating entities. So I just wanted to share the story. It's a pretty compelling example around how a leading financial services organization has transformed a previous weakness into an area of strength and really put themselves firmly in the driver's seat when it comes to having reports that inform key business decisions. A quote that I'd like to close with is from Nate Silver. "The signal is the truth. The noise is what distracts us from the truth." His book on data and predictions, written several years ago, was a really interesting look at how there are all sorts of false or unvalidated data points trying to pull our attention away from the ones that are real. Creating a thoughtful approach to organizational reporting helps filter out some of that noise and gives us a clear picture of what's happened in the past and what potentially lies ahead. And as someone with a teenager who's learning to drive, I'd much rather have them focused on the road in front of them than looking in the rearview mirror constantly. The advanced reporting tools we talked about today provide continuous updates on the status of your business. And the benefit of real-time data is that they offer an empirical framework from which you can make instant decisions based on the information in front of you. It's no longer enough to look at past data, try and interpret it for the present day. Neither is it enough to go on experience, intuition, and maybe a little bit of luck. It's now possible to manipulate and harness data as it happens for a continuous oversight of your business. Finance professionals now have the reporting tools to become visionaries for your business. All right, well, that's about all the time we have for today, but we hope you found this webinar helpful. And if you're interested in learning more about how Sage Intacct can help empower you to be more data-driven and forward-looking by using dimensional dashboards to boost your reporting, we encourage you to check out our website, which has product demos, case studies, as well as wealth and asset management industry articles. Thanks very much for joining, and have a great day, everyone.